Hello everyone, welcome to our Preparing the Incurred Costs Proposal webinar series. For most accountants, early March is tax season, but for us that work with government contractors this time of year is the incurred cost season. The incurred cost is every government contractor's favorite annual regulatory filing designed to true up your indirect rates in preparation for eventual audit by DCAA. We've prepared a series of short 4 to 8 minute video clips that you can watch at your desk to get ready to prepare your own submission. We hope these videos will help you in preparing your submission, but if you run into problems along the way or if you begin to wonder when you're going to have time to prepare, please don't hesitate to reach out to us. There's a contact link below the video, or my contact information is at the end of the video. We do full preparations of incurred cost proposals, which are compliant with the new DCAA ICS adequacy checklist, and we work with our clients to identify potential audit risks during the preparation. We also review many of our clients' submissions that they prepared for adequacy and accuracy, so there are a lot of ways that we can help along the way. We're happy to assist our existing clients with any questions or concerns surrounding the ICS, and if you're not an existing client, we'd love to discuss how we may be able to assist you in the future. So to get started, within this video we're going to cover some of the basics, like what the incurred cost is, when it's required, and what happens if you fail to file, and when the ICS is due. Before we get started though, I want to mention that the incurred cost submission, it goes by many names, and I'll use them interchangeably throughout the series, so rest assured we haven't changed topics. Some of the names that the incurred cost submission goes by are ICE, or Incurred Cost Electronically. This comes from DCAA's name for the customizable Excel file that's available on the DCAA website, and we'll talk about that in more detail in another video. Another few names are ICS or ICP, which are abbreviations for Incurred Cost Submission and Incurred Cost Proposal. And finally, the Final Indirect Rate Proposal, which is the most technical name, and that comes from FAR Part 42.7, which lays out the requirements for filing your indirect rate proposal. So what is the purpose of the incurred cost submission? Well, it's pretty simple. It's to finalize claim costs on flexibly priced contracts. Both T&M and cost reimbursable fit into that definition. In DCA speak from the Incurred Cost Audit Program, the purpose is to determine whether costs charged to auditable government contracts are allowable, allocable, and reasonable in accordance with applicable government regulation. So your incurred cost submission accomplishes this objective by compiling the indirect cost pools and bases in Schedules A through E to calculate your final indirect rates, and then applying these rates on Schedule H to arrive at total contract cost. The total contract cost is then compared to what was billed on Schedule I to arrive at your over or under billing for the year. I like to think about it in terms of tax returns because that's something we can all relate to. So throughout the year, your employer makes tax withholdings on your behalf, and these withholdings are estimated, and at year end we file a tax return based on our actual earnings to see how much we really owe or are due back from the government. And the incurred cost operates in much the same way. Throughout the year we bill costs to the government based on our provisional estimated rates, and then at year end we prepare the incurred cost submission, which acts like your tax return, and it compares your provisionally billed estimated cost to what you actually incurred to arrive at either an overbilling, which is the amount owed back to the government, or an underbilling, which is an amount owed to you by the government. So now let's talk about when the ICS is required. The requirement starts in FAR Part 16.307, which instructs the contracting officer to insert the allowable cost and payment clause into all cost reimbursable and T&M contracts, except for the commercial item contracts. Collectively, we refer to the T&M and the cost reimbursable contracts as flexibly priced contracts, meaning their value is flexible. It can't be determined until the final rates are determined through the ICS. So during the course of the contract, the price remains flexible. The allowable cost and payment clause, which is FAR 52.216-7, is what you'll want to look for within your contracts to know definitively if an ICS is required. And if it is there, your incurred cost submission is due within the 6-month period after the end of each fiscal year. So if you're a 12/31 fiscal year end client, then your submission is due on June 30. Or if you have a September 30 fiscal year end, then your submission is due at the end of March. So is that the only clause you have to look for? Now remember, ICS are required for time and material contracts too. And for those contracts, we need to look for FAR 52.232-7, which is the T&M payment clause. Remember, the whole purpose of the ICS is to true up flexibly priced contracts. And the T&M it's kind of a bit of a hybrid in that the labor rates are fixed and they only change as prescribed within the contract. So you may have an escalation each fiscal year, but the contract defines what those escalations are. The M portion, though, that refers to more than material. It's basically all non-labor direct costs. It is flexible. And because we burden those non-labor direct costs with G&A or maybe subhandling each time we bill, then that makes that portion flexible. So it changes based on your provisional and your actual rates. The G&A or subcontract handling burden is what causes us to have to file the incurred cost submission. So when you look at FAR 52-232-7, if you read the Part B within the clause, it actually makes reference to FAR 52-216-7, which is the actual regulatory requirement to file the ICS. So both 52-216-7 and 52-232-7 are the clauses that you need to look for within your contract to see if you need to file an incurred cost submission or disclose that particular contract on the incurred cost submission. Well, what happens if you just decide not to submit? Well, in general, bad things happen. The first is the contracting officer can unilaterally determine your rates, which means they can decide what they want to pay you. You can bet that this won't be in your favor, and in fact, their guidance recommends that they start at a 25% reduction to what was billed for indirect costs. So, not a good thing there. The second thing that can happen is that DCAA can withdraw your ability to direct bill by deeming your accounting system inadequate. And it's hard enough to get paid these days with the government, so the last thing you need is to lose your authority to direct bill and increase your time to receive payment by several weeks. The CO can also apply decrements to your current year provisional rates, and now with the new DFARS business system rules, if they're applicable, they can establish additional withholds based on the fact that your accounting system is inadequate. So finally, when is your submission due? And more importantly, how soon will all that bad stuff we just mentioned on the prior slide begin if you happen to miss it? We've already established that the due date is 6 months after fiscal year end, so if you see you're approaching that date and you have a lot left to do, feel free to reach out to us and we may be able to help. Probably one of the first things that we're going to want to do, though, is to request an extension from your contracting officer. And it used to be in years past these extensions were somewhat fairly common, but there's new guidance out for the contracting officers, which basically means that they're only going to issue an extension if there is a truly exceptional circumstance. So in all reality, though, I mean, we all know that DCAA is years behind on the ICS. So in the big picture, even if you got it filed on time, they're not likely to show up to audit for several years. Some clients I have are 5 years past due. But that being said, DCAA still gets a bit upset that they can't hold and cherish your precious ICS during that period. But it usually takes them about 4 to 6 months really to get around to issuing a letter noting that it is late. And even then, if you work with them, we rarely see any of the other bad things we mentioned, like unilateral determination of rates and withholds. Every auditor is different, though, and every CO is different as well, and many of these days appear to be increasingly hostile to contractors. So I wouldn't count on this chain of events, but that's just to give you a general idea. The best practice in general is always get your submission filed on time every time, if at all possible. All right, well, that concludes this video. Hopefully you learned the basics of the incurred costs, like when it was required and what happens if you fail to file and when the ICS is due. If you'd like to reach out to me, please feel free to contact me via any of the methods below, and I look forward to seeing you at future webinars.